All right, hello everyone. Welcome back to the channel. I haven't posted a whole lot this week because last week was on vacation. This past week, I took off for a couple of days to head down to South Carolina to see a graduation. So not a lot of posts, so I apologize for that, but I'll be back into it a little bit more. But what I want to do is I want to summarize this week with you. It was a fantastic week. In fact, it was a record-setting week for us. So considering that we have been out of town 8 of the last 10 trading sessions, and we've set records. I don't know, maybe it says I should just stay away and let my portfolio speak for itself. But what I want to talk to you about today is diversification a bit. And I really want to spend a little bit of time. We're going to look at the account. We're going to see why it was a record-setting week this week, but why diversification is maybe not the so golden rule of investing as people think. And, you know, we're all told to not, to spread our eggs across different baskets, right? And, what if I told you, though, that diversification can actually hurt your investments more than help? You'd be probably intrigued, or maybe you'd be a little standoffish. So let's face it, diversification is often preached as the golden rule of investing. Spreading your money across different stocks, bonds, asset classes. Don't put all your eggs in one basket, as the saying goes. It all makes sense. Diversification helps reduce risk, right? Well, hold on a second. Diversification, like most things, isn't always just black and white. Okay, while it does reduce risk, there are some limitations that we often overlook. Number one is dilution and missed opportunities. So here's the thing. Spreading yourself too thin, you might be diluting your returns. So let's say you invest in a bunch of different safe options or a ton of trades. I see people that I know for a fact have 100 to 150 different assets or trades on it at any given time. To me, that's just the S&P, right? Well, so while you're potentially diversifying across lots of assets, you're also diluting your overall potential for gains as well. So the more different assets I put on there, some are going to go up, some are going to go down. You could be missing out on something. Right? Over diversification can also hurt your ability to really research and understand certain assets. Information overload. Imagine if you're trying to track 100 or 50 or 20 different trades or investments, or 40 different trades or investments. Really, how are you going to stay on top of all of the trends and the performance and the news and doing all of that? I think it's hard enough to understand one asset class, much less 2 or 3 different asset classes. So really, what's the takeaway? So to me, while diversification is important, don't overdo it. Aim for a balance, spread your investments a little bit, but really choose strategically. Focus on a core group that you understand and that you fits in with your risk tolerance and your goals. So what I want, before I jump into our account, and Warren Buffett said, diversification is protection against ignorance. Now, I might be taking it a bit out of context, but really what he's talking about is if you don't have the knowledge or the time to do research on all of these different companies or assets, diversification across a broad range of holdings might not be the best idea. If you can't research them all, then don't. So diversification, again, is a protection against ignorance. Because I don't have time to check them all out, I'll just buy all kinds of different things or trade all kinds of different things. Buffett believes, okay, that a sophisticated investor who's done their homework, concentrating on a few high conviction holdings, is going to outperform a scattered portfolio. And that's what we do. Okay. Berkshire Hathaway, I think 40% of the assets in Berkshire Hathaway are all in Apple. Okay, so why is he not in 100 different stocks like Bogle and John Bogle and the Vanguard assets and all of those things, or the S&P 500? Why be so diversified and trying to be an expert on all of these things when you can be an expert on 1, 2, 3, 4, maybe 5 different assets total and be done? Even in our Discord, we had some members talking about getting into some other asset classes and trying to figure them out. We're always saying, well, what about live cattle this week? Or what about copper? Or I'm getting burned in copper, or I've got trades on in in lean hogs, in copper, and in nat gas, and in all these. You don't have to diversify that much. You can diversify, number one, a little bit by asset, but I don't think you need more than 3 or 4. Okay, I think you could probably just do the S&P 500 and be done. It's 500 different stocks in one basket that you don't even have to research individually. Okay, you could just trade ES or the S&P 500, SPY, XSP, whatever. You could trade that and be done. Okay, if you want to go into gold or copper or something else, fine, but you really don't need to be that diversified. Okay? 500 stocks is plenty diversified, in my opinion. But we look at 4 key asset classes here. I call them my core 4. Number 1, it's ES. Okay, it's the S&P 500, so I trade ES futures. Okay, number 2 is oil. Okay, I trade oil futures. Number 3 are bonds, trading bond futures, and number 4 is gold. Okay, those are the core 4 for me. I like to have plenty of trades on in those 4. Now, what trades are they? It all depends on the chart. It depends on what I'm seeing, not news. I don't have to track 900 pieces of news. Okay, I'm trying to tune out as many people posting news in our Discord as I can, just so that I can focus on price. Okay, price and volatility tells me everything I need to know. Okay, if volatility is rising, probably there's some selling or concern out in the market. Okay, I don't need news to tell me that there's something going on in the market. If volatility rises, I know there's something going on. I don't have to watch the news channels to tell me this. Okay, if the price is falling, there's something going on causing the price to fall. I don't need to know the why. I just need to trade what I see. Knowing the why isn't going to help me guess what's going to happen tomorrow. Anything could happen tomorrow. Okay, what I want to know is what's going to give me the best chance to be successful. So which trades are going to help me be the most successful? So the one thing I really want you guys to take away from this today is, am I over diversified? And I know Jim Cramer does the am I diversified, but I think he's really only looking for your top 4 or 5 holdings to see if you're in multiple sectors. He's not looking to see if you have 40 stocks. What he wants to see is, do you have just 3 or 4 or 5 different asset classes potentially? S&P, gold, oil, bonds. You want to throw in some Forex? Great. Okay. You can throw in a couple of it, but you don't need a whole lot more than that. And you don't need to be an expert in everything. You just need to be an expert in 1 or 2. And for me, I think you can diversify, not necessarily by asset, but you can diversify by strategy. You've got Strangles, you've got 112s, you've got long-term 112s, you've got ratio spreads, you've got naked puts, you've got call spreads, credit spreads, okay, debit spreads, whatever you want, put spreads. It doesn't really matter what you do. You can diversify by these strategies. So I can diversify a little bit by asset, I can diversify a lot by strategy, and I can also diversify by expiration dates. Okay, I can have some short-term trades. I can have some longer-term trades on. I can have some at 60, some at 90, some at 120. I can have leaps on. Those are spreading my risk out, not only among maybe a couple of different assets, but mostly by a bunch of different strategies, 3 or 4 strategies, okay, which I have 3 or 4 core strategies, and then 3 or 4 ways within those strategies of days till expiration. And I personally like the longer days till expiration. Makes me, I feel a little bit more secure, a little more safe. It reduces my overall risk out there, and I feel that I have a good control over that. So anyway, I wanted to just bring that up about diversifications. You don't need to go crazy with diversification. And let's talk about our trades for this week. So this week was, and let me share my screen. This week was a phenomenal week for us. So best week we've had ever in trading. So let's jump into it and see exactly what we did this week in trading. All right, so Monday, we generated $8,900 on Monday. Tuesday, another $2,400. We'll go through these individual trades. Wednesday, $1,600. Nothing on Thursday. I was driving 9 hours, didn't even look at the markets on Thursday. And then Friday, we closed another 1560. Some of these just closed automatically because I have my profit targets in place. But overall, $14,536 this week. So for me, that's a record week. Going back up, my previous, I had a couple $8,000 weeks. I had a $12,000 week once, another $8,000 week, some $7,000 weeks. Okay, but previously it was $12,000 was the high for the week. But we hit 14,536 this week. So best week of trading ever in this portfolio, in the Income Navigator standard trading portfolio. This is just a Reg T account that we're trading in, and we are not massively diversified. We have a couple different underlyings, okay, but we have a lot of different strategies in play and a lot of different expirations in play in this account. So we ended the week 594 on delta, so we're pretty delta neutral, 0.12%. Our theta is at 1527, which is great, 0.31% theta, which is fantastic considering where IV is in the S&P, which is, VIX is dead. VIX is at 1193. It's at an all-time low, or at least an all-time recent low. VIX is just barely keeping a heartbeat in the market. There's no volatility, but yet we have 0.31 in theta going. Our net lick ended the week at 498,332. So we're just down a fraction from our all-time high, which we did hit earlier in the week. And then BP usage 57% after our bill is in there. So overall, great week. Right now for the month, we are up 19.37% in realized gains or losses. So we've actually closed now over 19%, okay, on our net lick, so which is fantastic. So I'm pretty excited about that we are not even at the end of month number 5, and we're up 19% for the year in realized, and our net lick is just behind at 17%. The overall market's at 12%, doing pretty well this year, but we're averaging almost over 4% a month in realized gains. So it's fantastic. Do I expect that to continue? No. Are we going to keep shooting for that? Absolutely, we are. All right, so that gives us at least a little bit of an idea of where things are. All right, so for May, where's our income so far? From long-term 112s, we're at almost $6,000. On bond Strangles, almost $5,000. Other future Strangles, about $1,600 there. So overall Strangles, about $6,000 in Strangles. Great month for Strangles. On 112 trades, we're up $2,800 on 112 trades so far. We're down just a fraction on a BA 112 because the debit spread expired. Zero DTE, we're up $2,000 this month. 120-day trades, we're up $5,000 this month. Bill, our distribution was over $800 this month and $158 in spec trades. So we have now generated, again, for this particular month, we're now up 22,573. So we're almost $120 away from the best month of trading we have ever had, which we set back here in February. So we're $100 away. All I need is about $200 in wins, no losses this coming week for a couple days. It's a short trade week. We'll see what happens. But if we can close out probably one more winner, it'll be the best month of trading we have ever had to go along with the best week of trading this week that we've ever had. And I really want to take a look at our gains and losses for the week. We have won 20 out of 20 trades. We are sitting at a 100% win rate this month. So if you're looking for some strategies that are going to give you a great chance to be successful, a great chance to beat the market on a pretty consistent basis, okay, as well as improve your overall portfolio without having to do research on a million different underlyings, come and see what we're doing here. This stuff is fantastic. We don't have to get super in depth to make a ton of money. All right, let's take a look at some of the trades this week. So first trade was we closed a naked put on an ES, long-term 112. We also closed a naked put on a bond 112. We also closed a bond Strangle. We also closed an ES naked put trade, just a standard naked put. We also closed an Aussie dollar strangle there, and then an oil call side 112. We closed the naked calls on that. So there's where we are. But if you look at this, it's ES, ZB, ES again, 6A, and CL oil. Only 4 different underlyings this week. Okay. Looking at our trades for the year, we have only traded 13 different underlyings total. Okay. But if you look at these, I don't consider, well, I don't trade a lot of these that often. So we're really looking at the core 4. Okay, look at our gains on the year. So far, 33% of all of the gains in this portfolio have come from oil, CL, and futures. So oil futures, 1/3 of all profits. ES futures, 33% as well. So another third is coming off of ES. So those two alone account for 66% of all of our wins. Okay. The next largest trade is gold. Okay. So gold is sitting here at almost 10%. Okay. Bonds are sitting down here about 8%. And then you've got SPX, which the only reason this is at 9% is because this is our 0 DTE trades, which is still the S&P. Right? So I don't really need to research anything different between ES and the SPX because it's the same doggone underlying. Okay? When you look at it, oil, ES, GC, and then really it's bonds. So our core 4, right there alone, I won't even put SPX in there, 66% plus 10% from gold, okay, so 76%, okay, plus another 8%, so 84%, I believe that is. 84% of all of our wins are coming from 4 different stocks, and that's it. You don't have to diversify like a maniac here to be successful, okay? All you have to do is understand a few underlyings, okay, and put a few different trades on. As you can see, we had all of this money coming in from multiple trade sources. In fact, I don't know if I can go back to the pivot table, give you a sense too of what the different trades are as well, but see if we can just quick do it. I know I'm not sharing my screen. You'll be okay for a second here on it, but what ticker P&L. I was sorting by ticker. I don't want to mess my formulas all up right now, but I'll take a look. But I'll look to see which of my trades overall this year. But if we really just even go back and look at the dashboard, which I'll reshare my screen with you guys. If we look at the dashboard, we've made $82,440 this year. So we've made 82 grand, not too bad in 5 months. Most people, I think, would be happy to generate that, considering we started the year with $395,000, right? And we've generated roughly almost 20% off of that in 5 months. Pretty doggone good. We're averaging 4% a month, as I mentioned. Where is this 82 grand coming from? Well, you've got 25 of it from long-term 112s. You've got 20 of it from Strangles, 22 of it from other 112 trades. Okay. Then you've got, naked puts, 0 DTE, some bill distributions, and some other spec trades. So again, we don't have a lot of different strategies running. We're probably running like 4 or 5 strategies total in this particular account. So 4 or 5 strategies are accounting for all of our gains. In fact, 75 to 80% of our gains come from 3 strategies: long-term 112, 112, and Strangles. Okay, they're accounting for almost 75%. Diversification is overrated. You don't have to search everything. You also don't have to keep up with everything and what's going on. You just have to trade what's in front of you. All right, so if you found this video helpful, click the like button down below. Happy Memorial Day. I don't know if it's a happy occasion, but we are celebrating those who have served. Okay, enjoy the holiday weekend. for you. Remember, and thank you to all of those who have served our great country here that allows us to do what we're doing. It allows us to make money, allows us to help other people out there. So turn around, help other people by sharing and liking this channel with people. If you're not a member of the Discord and you want to see how we're doing it and how to set up your portfolio, come and join us. It's a great time to do that. Again, enjoy the holiday weekend. Thank you to those who have served. Remember those who have given their lives so that we can all prosper and enjoy ourselves and enjoy the freedoms that we have here in America. It's a great place. God bless America. Have a great weekend, everybody. We'll see you later. Bye-bye.